Hello and welcome to Caching Waves. This is an Elliott Wave update on Verasity, but it's more of a general discussion about how to deal with a chart that looks like this, where we have a lot of three-wave patterns and how you can actually trade these, but more so on the micro time frames, just for small profits. So starting with the low, first thing that stands out, this is kind of what goes on in my head, is we have three waves to the upside, right? You can take a quick measurement. It looks like a 1-to-1. Yep, it's a 1-to-1, so we have that as an ABC. So we have an ABC to the upside. So if we were analyzing this chart from this moment, from this high, our first assumption would be, oh, we hit a 1-to-1, it's probably an ABC. And then we would say, okay, what can we get from here? We could say we could get a flat, where after we hit the 70% retracement, we can make 5 waves up. That would be our initial thought. Or we're going to get a ABC to the downside as a deeper, longer correction, and then we can attempt another 5 waves up as a flat or a double zigzag. And when we don't get that, we would think, okay, we're most likely corrected here. This might be something like a 4th wave based on the previous price action. And this could be, does this qualify as a 1-2 to the downside? I would argue it does as a leading diagonal. We have a series of zigzags to the downside, ABC, 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 just looking at the shapes. Or we have a double zigzag in a corrective manner, W, X, Y. So it can be either or, right? So we measure out our pivot. If you know Fibonacci's well, you know we look for the 618, and what a surprise, we get a rejection off there. So as of right now, I know this can be either a WXY or a wave 1 to the downside. Both options in play. And if you were watching this in real time, you would have noticed the choppiness of this wave to the upside. Right here, let me zoom in. You would have paid attention to the choppiness of this wave to the upside and know, okay, this is either a W wave, an X, and a Y for the larger term view, because this is only 3 waves, and we can expect to move to the downside. Or this would be most likely turning into some sort of 1-2, 1-2. But you'd shift probabilities unless we're in a super bullish market, because we hit the 1.382, which is a common target for a C wave. This is where you can use the rules and guidelines to your favor. So as you can see, we have a 3, 3, or 5, and a 3. So we're kind of stuck between both worlds here, right, at the moment. So looking at this structure, a lot of overlap. I can see a potential triangle. So I would have this as either an A, B, C as a triangle. We'll go down to the smaller time frames to verify that. Or It's an ABC, ABC, ABC. Or this is another 1, 2 in a diagonal. To the downside. 1, 2, 1, 2. Seems unlikely because of the price, obviously. So I would be more leaning to this correction as an ABC, just based on the compression of it. It looks like it needs a relief rally just looking at the structure. But I would expect if this is a WXY or an A wave as a 3, and we got this into the 618, this could turn into a 3-wave pattern as a zigzag, right? Maybe protect this low, and this all becomes an ABC before finding further upside. So that's what I'm looking at there. So I would put this pretty low probability that we get the downside. So our options now are, is this a B, C? Which would make a larger W, X, Y. Trying not to confuse you. I'm just trying to keep you up to date on this here. So what we would end up getting is a very drawn out correction. It's an WXY. As you can see, protect this low, then look for a 1-to-1 of this move later on. So that's one path. The other path is we've completed a ABC to the downside and we need to move to the upside. So if this is the A wave, what would we expect at this point, right? If this is the A wave, we'd be looking for a B wave to the upside. So we would look for a 618 retracement, 50 to the 618 retracement. We know this is, in that scenario, this would be a diagonal, so we would expect to get 5 waves for the C wave. For targets, if they become standard, I'm not going to put these right on zoomed in, but if we hit the 50, we'd expect a 1-to-1, which slightly protects that low, depending where the pivot comes from. And in that scenario, that's this ABC, just so you can see. But we can also hit between the 60 and the 100. We just want to break this low in that scenario. So we have our scenario number 1. So we can leave that on the chart. So in that scenario, we are looking for a move up to around 7 cents. And percentage-wise, if we're trading that, that's a nice 30% move plus, as you can see. So what if we don't pivot in this area and we keep moving to the upside? What I would suggest at that point is we're still in the middle of a larger correction because this was 3 waves. What's nice about this wave is because we have 3 waves, we pass the 70%, so this whole thing can turn into a flat, a 3, 3, 5. Again, we'd be targeting the 1-to-1 extension in this scenario. which would take us to around 10 cents. We can also do the 1.236, 1.382. In this version, if we make a new high, this would end up making a flat pattern where you'd expect to move to the downside after that and then move up. It's a larger ABC. So I'm just trying to show you on different time frames how all this pans out. And there's one other option, but again, low probability. And that would be that this is somehow a leading diagonal, which is very, very low probability, where we just get 3 up, 3 back, 3 up, 3 back. It'd be more likely an ABC on the larger trend, as you can see. But we either get an impulse or a ending diagonal for a C wave as an ABC. So we know we need to come most likely up between 7 cents. We know this can turn into a impulse, and we know this can turn into an ending diagonal for a C wave because we started with 3 here. That is very clear that that's a 3 wave. So as of right now, what would my trading plan be? My trading plan would be to try and get the move up between the 50 and the 618 because it looks like we need to correct this entire move. And I would be watching the count on the lower time frames of this wave here. Because if we get a clean 5 wave, then I would expect further upside. If we get a lot of chop sideways up to this area, that would switch probabilities that we need this move to the downside before our next attempt to make this larger correction. So let's go down to the smaller time frames and see where we're at. Oh, it's not showing up. Sorry. Let me just add on the hourlies here. Okay. So this can be counted many different ways. There's a lot of chop. But the best I found was as a triangle. Get our A, B, C, D, E, and then our move to the downside. Reason being, as you can see, we just hit the one-to-one extension, our A off our B. So I would have this as an ABC. The question is, which is always difficult, is the bottom here, and this was just a flash crash event, which I would usually use as the bottom here. Or is the bottom over here, and this is like a really effed up wave A, B, and we're working on a C wave. But either way, we know we need to most likely come up to this area. So I'm not too concerned of this wave count in the past here. The only way it would really make a difference if this is the low is we'd have ABCs and then ABCs with a truncation rather than this triangle. But again, as you can see from where we expect price to go, it doesn't really matter right now. It's too complex to become confident on one way or the other. But for purposes of this, I'm going to call the low over here. It is within like, you know, a very marginal amount here. Like less than 1%, right? So down on the 15-minute, we'll call this our low to begin our count. What do we have on the 15-minute? Well, probabilities have this as an ABC to the upside. We measured pretty much 1-to-1 here. This could be a flat. If this is a flat, then we do have a 1-to-1. But alternatively, less probable, but you do see it in crypto, this could be a 1, 2, 3, 4, 5, and we get an extended fifth wave. So you can see both scenarios do work, but for the purposes of what's most likely, we'd call this an ABC. So I know this is either an A wave or a W wave as a zigzag. As you can see, we came between the 50 and the 618 in a nice sideways channel. And I'm not calling it a flat because we didn't hit the 70%. So most likely we're coming up with a Y wave. If you look right now, there's pretty clear 5 waves. It's pretty nice actually. That's a nice 1, 2, 3, 4, 5. Very nice. So expecting a correction shortly. Measure that out. It looks a bit extended, which is fine on the lower time frames. You see it a lot. Yeah, we're at the 2.382, as you can see. So I'd expect a pivot at any time. I usually look for, if it's a 1-2 between the 618 and the 1-to-1, but if it's just an A wave, a little bit less. So what I'm looking for here with this 5 waves is an A, B, C to the upside. And that gets us right to the area we're looking for on the larger time frame, which is a fib pull pulled from the last high to the last low. That's our 50 and the 618. But we know we're looking higher at around 7 cents. So you say to yourself, okay, we have to get up to 7 cents. How are we going to do that, right? Well, if this holds, this becomes an A wave. We get a correction to the downside. And depending how deep we get as a flat or just a wave as a W wave, then we make another move to the upside. And the correction just gets bigger. And again, this is how the chop happens. Now this just is a bigger W or A wave, and we come back and chop our way up. So this is how we can move to the upside correctively. It's just waves within waves. And knowing that, if you get this low entry, you can just let that trade ride and just ride through all this chop garbage, right? And raise your stops as they at invalidation levels, sorry. So another thing to consider, I would keep this as a 3 wave. I wouldn't really change this. Is, okay, we have 2 ABCs. Let's say we're making that flat on the larger time frame, where this is a B, C, and we go up to that 10 to 11 cents. How would that happen from this 15-minute level, right? I wouldn't really go lower than 15 minutes for these wave counts unless you're scalping single moves. But I would suggest, okay, we're gonna most likely make a 3 and a 3. We'd most likely have a 1, 2, 3, 4, 5, and that's how our leading diagonal would pan out. A series of ABCs to the upside, like so. And if we see this play out and we start to see rejection, there's an area where we can actually take profit and re-enter lower, because we would expect this to come back down, right, before moving up again. So we'd be waiting through all that. But that's a more advanced thing. So we know we can chop up correctively or make a leading diagonal from this point. Can't really see an impulse unless this is a very odd wave 1 in 5 waves, as you can see with a extended 5th wave. But an area to keep in mind is once we start making new highs here, you might want to move your stop to break even if you took this. Reason being is we're coming up to the 50 and the 618 of this last down move. And if you remember, we're not sure if this is a bottom or not, or if this was truncated. So we might actually just get this last move down and we're finally complete. And then this would have to be recounted back here, and this would be an ABC, ABC, ABC as a diagonal, as you can see. So this is where counts can change. This is how you can navigate with them and really hone in on where we're at. So as of right now, I am more to the upside on this, at least in the short term. I'm not even in this right now. I think I'm going to get into this. Not financial advice, but my trade setup would be something like this, looking for that upside. And depending if we get that diagonal or if we make this ABC and start to chop sideways, I'll either probably stay in it or get out and get back in. Haven't decided yet. If I was just scalping this just for a day or two, I would just be targeting that C wave. I'd be going wherever it ends, A, B, C, go to the 1-to-1, wherever that is, and I'd be out. Probably something like this would be my trade setup, up to that 1-to-1, quick 2-to-1, in and out. And then wait to see if we get that sideways channel. This is why there's so many different ways you can trade, right? But what's nice about this is once you get a 5 wave, it doesn't complete anything. So most likely we need another 5 waves up. And this is where traders can get really confused and are like, what's going on in this market? What can happen here? You still have to keep in mind that this is only 3 waves. This chop here is most likely complete, but there's no reason we can't get bigger. Say we get a really deep correction here, and then we come up, make a new high, we can just come back, and this all becomes a flat. And then we move to the upside. So we don't know what the market's going to do, but we keep in mind possible scenarios. Because this one came so high, I would lead probabilities that we're getting this, and then 50-50 on whether we're getting that diagonal or correcting larger to the upside, where this just becomes an A wave, get a sideways channel, and then we go for our C wave. But yeah, I hope this was a good exercise for you. And anybody that tells you, I know what the next move in Verasity is, good luck. Good luck. We have ABC, WXY, ABC. This could turn over, make that C wave as a diagonal, as you saw. This can chop its way up to 7 cents, then turn over. This can also go up to 10 to 12 cents, and then roll over. So you can see why there's so many different probabilities when you have 3 waves that can happen here. I didn't even mention this can all turn into a triangle. Right? We hit 618 levels. This could be an A, B, C, D, E, and we roll over, but it would be from the same area. Imagine that, just a massive 4th wave triangle, but unlikely because you usually get spikes on the labels of the ABCDE, so unlikely, but it is there, even though it's unlikely. Yeah, guys, this was just more of an exercise. I'm probably going to trade this, but obviously I can't give any good advice on this one. This is more of a scalp scenario, but this looks like a pretty decent trade setup, at least to that 1-to-1 only, and we'll see where it goes from there. But this is also why I argue Elliott Wave's better, because a lot of breakout traders here, as soon as they get a breakout, they assume we're going off to the moon, but we know we have a 3 wave here. So they'll get this breakout, and then they'll move their stop to the next pivot low. And guess what? It turns over, stops them out, then it goes right back up. or we get that diagonal and then it stops them out and it frustrates the hell out of them. But if you can get a good view of the potentials, you can make your trading strategy based on that. All right, guys, that's it for this one. Thanks for watching. If you like this type of video of analysis like this, I will make more. Just let me know in the comment section below. Thanks for watching.